Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, sponsored by the Equity Management Academy. On this segment, what I would like to do is review the report that was published last week that we call the VC Future Swings Weekly Price Indicator. What you see here in the home page is the home page of basically the Equity Management Academy website that you can have access to, and at your own time you can review all of the reports that I published. Basically, if you click on the reports on the left here on Remore, this gives you an idea of everything that I published. I make a point of basically commenting on very specific situations developing in the market, fundamentally sometimes, although primarily we use the algorithms of the VC weekly or daily to trade the markets. We do take a look at the big picture, and you can click on my name here, and this will take you to basically all of the reports that I have published here on this website, and you know, going back a few years, all the videos. I have posted hundreds of videos and basically reports that you have access to. The main thing that I would like to focus on this segment basically is the report that was published last week that we call the Weekly VC Price Momentum Indicator. This is a report that we publish every Saturday, and it is the report basically that prepares you for the activity of the following week, the coming week, the following week. And so this report, published on March 13th, basically was preparing us for this week. And the report is a mathematical formula that is extremely accurate. So to move right into it, the signals are automatically generated by integrating electronic weekly statistics and proprietary algorithms. And just for disclosure purposes, as required, the Equity Management Academy offers educational services only, and is not a broker-dealer. It does not take any client deposits and does not hold any client accounts. Trading derivatives, financial instruments, and precious metals involves significant risk of loss and is not suitable for everyone. Past performance is not necessarily indicative of future results. All prospective clients must read and acknowledge these risks. All prices are subject to change without prior notice. We have a no refund policy. Now, to move right into the report that was published on Saturday, the April gold futures contract closed at 11:58 on March the 13th. The market closing below the 9-day moving average of 1229 is confirmation that the weekly trend momentum is bearish. So coming into this week, the fact that the market closed below 1158, below 1229 at 1158, it was a little bearish based on using the 9-day moving average. But it also told you the alternate count that if it closes above the 1229, then basically this signal, this negative signal, would be negated, or this bearish signal would be negated. The weekly momentum indicator is the algorithm that we use basically to follow the weekly trends of the market. It is the pivot point or the metrics of the week that identifies for us the uptrend, the weekly uptrend, or the weekly downtrend. And with the market closing below 1160, it confirmed that the price momentum was bearish coming into this week. But it also told you that a close above 1160 it would basically negate the bearish signal to neutral. So it gives you an alternate count when it executes or activates a trend or a signal. The weekly price indicator is the algorithm that if the momentum indicator activates a signal by closing below 1160, then it tells you that it can come down to these levels and to cover your short on corrections to the 1145 to the 1133 levels. And it tells you go long here on a weekly reversal stop. And if you go long, it tells you basically where to put your stop. And so it identifies for you the reversal stop, and it also tells you that if it triggers a long, where your stop is for the week. And this is a stop close only and good till cancel order for the week. If it activates the signal down here, it tells you basically look to take some profits on longs as we reach the 1172 to 1187 targets. And so the trigger point was obviously if it came down to 1145, it would have triggered a buy signal. So why don't we take a look at basically the gold market last week and see what happened. Okay. On the 13th, which was right here, the market told you that if it comes down, or actually closing below, obviously the 1160, which was the pivot point for the week, that it could come down to 1145 to 1133. And on the 17th, the market made a low of 1141.60, triggering a buy signal at 1145. And your stop was 1133. You could add a second contract at 1133, as that is the buy to weekly level, and use that level as your stop on a close below to get out. It never got down to 1133. It came down obviously to 1141.60 that was made on the 17th, and it triggered a buy signal at 1145. And it also basically told you that if it goes above 1160, which is the VC code, why don't we take a look, and why don't we add basically the algorithms for the week and see actually what happened or how the price reacted to these algorithms. And you can see here that on Tuesday the market came down below 1146. These lines basically represent the algorithms that you see here on the report. The 1160 here that you see here is basically the pivot point for the week, or the metrics for the week, and below are the buy one and buy two levels on a weekly basis. So on the 13th, the market told you that it could come down to the buy one level of 1146. So you already knew that, and our subscribers basically had orders in place and received texts directly when the signal was activated on Tuesday, and obviously we did another test on Wednesday. Now, the signal was activated on the 17th, and it told you your first target was 1160, which we got there the following day, or in fact the very same day. The market got up to 1160, and then the following day it went through 1160, and it told you that the trend at that point, the downtrend would be negated, and that the uptrend will be in place, and that your targets would be 1172 to 1187. And of course, you can see the market testing that level on Wednesday at with a high of basically 1175. So it would have taken out your profit from 1145, starting at 1160, 1172, and eventually the 1187 area that is the sell 2 level for the week that we have in place to activate basically the sell 2 level and complete this swing trade. The market has given us quite a bit of an opportunity or a range from the low 1145 level that it recommended to buy to the high that we saw here so far today, which is essentially the 1177 target zone, almost completing the second target of 1187. We have taken some very, very healthy profits up here. Our subscribers that follow this recommendation have taken out quite a bit of profit out of the market, and we are waiting basically now for the second target to be activated. And so this is how we use the weekly VC indicator in identifying the highest probability entry points, which is in the buy 1 and buy 2 level, as you see here, and on the chart on the left, as you can identify it with the actual lines themselves that are posted prior to the price action, and when the price action crosses these codes, it activates a signal, and closing above that code, the day it activates the signal, it basically triggers a signal. Above the code, above the buy 1, it's a buy signal, and below, obviously, it represents a sell signal. We're looking to buy corrections into that buy 1 and buy 2 area. For our long-term investors, we are suggesting to use these areas to identify the lowest risk entry point to accumulate for a long-term position. For swing traders, we recommend to use the buy 1 and buy 2 levels and basically swing trade into the targets of sell 1 and sell 2 to take profits on swing trades. For day traders, obviously, use the algorithms that we published on a daily basis to activate signals that are basically triggered on a daily basis. What you can see, as you can see here, these are daily algorithms basically that we follow and that we use in order to day trade the market on a daily basis. Our clients basically also receive a daily spreadsheet that prepares them for the following trading session. I am very, very proud to say that I believe we are one of the very few rooms that prepare the subscribers to the following trading day and what we can expect the following trading day. And when basically you receive this information by 7 o'clock Pacific Standard Time, it gives you the trading ranges for the following trading session. And as you can see here, this is what we use basically to day trade in the futures markets, as well as in stocks or ETFs that we feel offer the profit potential for a day trade profit. And as you can see here, we've pretty much day traded so far today on JNUG and pulled in about $380. We have day traded Nugget, which are gold mining shares, ETFs that are aggressive ETFs for aggressive traders only that trade volatility, that feel comfortable trading the volatility of a futures contract. These are great instruments to trade short term, to day trade with results that I think are compatible to the futures markets without taking the unlimited risk of margin. Any questions at all, please feel free to give me a call if you have any questions to 805 area code 418-1744, or you can email me directly at support@ema2trade.com. This is Patrick MontesDeOca. Until next time, my friends, be well, good trading, and take care.